Hello, everyone. Stocks finished off the week with a mixed session overall. The good news is that the Russell 2000 led the way up 0.54%, and on the week overall, the Russell 2000 was up 1%. Not bad considering the selling that we saw the previous week and a half, or 2 weeks really. But overall, it has a very dead cat bounce feel to it. We haven't even retaken the 50-day moving average, and we finished well enough off the intraday highs on Friday to say that it's possible that we've already, have seen the most that we're going to see out of this uptrend. But I don't know. It's early. We could still, go higher. But the NASDAQ also, you can see that on the week it was only up 0.78%, kind of a dead catish bounce. If you really want to put in a strong low, if you think you've seen the lows of any pullback, you want it to be a little bit more convincing than what it is. But the NASDAQ on Friday, pretty much flat overall. New York Stock Exchange, very flat. The Dow Jones Industrial Average was about the weakest index, down 0.32%. The S&P 500 was down 0.23%. These are both technical distribution days on both of these indexes. However, volume was basically higher due to end of month rebalancing. But like I said, overall, as we go into the next week, still look pretty weak overall. Our personal holdings look great. All of our long positions, we remain 70 to 75% long. I think 50 to 20% cash, and then I have 10% hedges on because on Friday I got very fortunate. I've kept ever since my screwed up non-trade on the 23rd whenever I got a long hedge signal in SRTY and I did not take it. Following the very next day, after realizing after a 5% move how foolish I am, and actually in 2 days 7.38%, I put a limit order on at where the limit order would have been if I had gone along the signal on the 23rd at 25.45, and thankfully on Friday that limit order was hit and it closed at 25.61. So not only was my limit order hit on the pullback, but it rebounded and went higher. And with the volume surge today on this inverse ETF, and based on the way the indexes look with their reversal off the highs, it's possible that we just got an excellent fill. So what I've done with this SRTY hedge now that I've gotten it at following this pullback is I'm splitting up my sell stops into 4 separate orders. The first one is below 25.19. The second one is below 24.28. The third one is below 23.53. And the final one is all the way back here at 22.80. But the bottom line is that there's 4 different levels that I'm watching, and I want to keep my hedge on because we remain extremely heavily long basically now. And it just looks like that we're going to be in for a rough August and September, like we almost are every August and September. This is nothing news. This is seasonally the worst time for stocks. So it's going to be what it's going to be. But overall, we still have plenty of winners. AVOL was an earnings winner on Friday, and since its long position, it's moved up 31% since April 21st. That is quite a big move for a stock like this that you really wouldn't think would work that much. And then remember our recent long position, Colm, that we got fully shaken out of. I got fully shaken out. I got shaken out a half on the 23rd, fully shaken out on the 27th, and of course it's rebounded. Big earnings winner on Friday, showing that even though if the market wasn't rough right now, wasn't pulling back, we probably would have been kept some of our long position on Colm, and we would have had a nice gain. And then FIX is a stock that we've been long for a while back here. It was an earnings winner on Friday. We now have a 45% gain in that one since March the 11th. And then, of course, there's XON hitting a new high, and I think that we have a 30% gain in this one now from our long position. Yep, 34%. And then IMS was an earnings winner also on Friday, and since our long signal, we are now up 18% on this very slow mover. So everything is looking good for our own personal holdings. Sell signals, MTLS got a 50% sell signal due to it closing below the 50-day moving average. That loss is very small. I think it's like a 2% loss from our initial long position, so not so bad whatsoever. 50% sell signal here, and now with all that action, no matter what, I would have the final sell stop below 855 if you're long this speculative stock. It's speculative, not high quality, so you probably shouldn't be long it. And then KRNY did not hit my final sell stop. It's at 1105. It actually hit 1105, the intraday low on Friday, but it moved to 1104. If this thing continues to reverse like it did on Friday off of its highs, will be completely knocked out once again with a very... Is that a small gain? That one I think is a small gain. Small gain, small loss. It's all the same to me. Not what I'm looking for, bottom line. And then ABCW, I was knocked out of all of it. I do believe on this day, as I moved my final sell stop to below this low a day, after having it here, but just the fact that it rolled over the way it rolled over was problematic to me. But following Friday's session, it lost its positive BOP, so it's now got negative BOP, and volume was slightly above the 50-day volume average. And with that rollover in this technical pattern, that eliminates it as one of our current long holdings. So ABCW should be a full sell. Small, once again, insignificant losses from both the original and add position, and that's what you want to do whenever you're wrong on a stock. Quite a few stocks, like I said, there's still some decent ones out there. HOLX is acting great after it gapped up following an earnings victory. FOLD is one to watch. It's breaking out to a new high. Biotechnology stock, a good looking technical pattern despite the recent market. And then Kite is a perfect speculator scan stock. Beautiful long-term chart pattern right now. It looks like it's building out a cup with handle pattern. So because these stocks are still doing good even with the mixed market, I want to go ahead and set up a buy stop, but only 1% of my account capital. Like I said, this chart was beautiful. We're in an uptrend buy mode. Sure, 5% of my account capital. Absolutely. But for now, just 1% because I don't want to miss it and possibly feel like an asshole if the thing runs, 20-25% with I was just afraid to take it. I'd rather take it and be wrong, lose a few percent, than completely miss if it runs. But the buy stop is set just above 75.08. Breakout of 75.08, I will be long. And then on an end of day basis, I got two long signals. AGN, I believe they sold their generic drug line or generic business to Teva, but it wasn't a full, acquisition buyout by Teva Pharmaceuticals. They just sold that part of the drug. So I know a few people have been saying that they've bought Allergan, but if that's even how you say this this name, all I know it as is AGN. But for me, it looks good. So AGN is a new long signal. Volume, following the gap up here off the Teva news, it's holding support beautifully. Not a pocket pivot point signal, excuse me, but volume is higher than the previous two sell-offs, indicating very strong support. And BOP is increased from a good green level to an even higher green level, so that's nice little confirmation. First sell stop is below 326.29. Final sell stop is below 324. We do not risk much at all before we know we are wrong. Earnings are on the 6th, making this a kind of riskier trade. But AGN, as you can tell just by looking at it, doesn't gap down following earnings releases, and it hasn't for a long time. And with the way that their business is going based on the fundamentals that I see and that I've researched, I don't think we have to worry about that. But if it doesn't move higher immediately, we'll be knocked out of either half or all of it quickly enough, so it's not a big deal. And then RRGB, this is a pre-perfect speculator stock. It was also confirmed in another scan. I don't have my book in front of me, but it's definitely can slim quality and pre-perfect speculator scan quality. Earnings are on the 11th, so we do have time before we know we are wrong on the position if it doesn't move higher immediately. And if it doesn't go anywhere before the actual earnings release, you can use 90.28 as your first sell stop if the stock doesn't move higher immediately, or 87.89, and then I recommend a final sell stop at 86. What I'm going to probably do is I want to see this thing move higher immediately, so if it doesn't, I'm going to get out of half of it with a move below 90.28. And then, of course, I'll give the rest a much larger swing to work out. And that's why I'll be using the 86 as my final sell stop. But once again, 1% into RRGB because of earnings, 1% because of AGN, 1% because of Kite, and even more importantly, looks like a dead cat bounce. We're not out of the woods yet. I saw bulls pulled back on the Investors Intelligence survey to near 2015 lows. Not only is that a good sign, but I actually saw bears tick up, and I think they're around 17%. So it's good. We want to see the bears rise and the bulls fall. The most ideal time to buy stocks or to be looking for a significant low and to look to push it on the long side is whenever you have more bears than bulls. And we haven't seen that on that index, I don't think, since 2011. Am I right there? I don't even know if I'm right about that, but I do think that I am. So I don't think we've seen that for quite some time. But that's what I'll be looking for a significant low. For now, looks like the market still is a little toppy. I'll see you on Monday.